passed through its darkest hour. That's also we are seeing after the Lehman Brothers. The global GDP of the key driving nation went down drastically. Global activity in the key areas, especially production, trade, oil, non-fuel, commodity prices, also affected badly. And we see the recovery remains largely policy-driven and faces significant challenges as policymakers look to unwind the unprecedented fiscal, monetary, and financial support they provided to keep their economies and financial market from collapsing. So this is a little bit of rundown of economic outlook, how it looks. If you see, these are the IMF figures, which was provided in January this year, and which will give till 2010 World Economic Output projections. And if you see, where is UK in 2009 and 2010, both the figures, if you see, and US, France, Germany, and then Italy, Japan, and then the world economy overall and the advanced economies. So if you overall, if you see, the world economy, of course, 1.9% is going up, but at the same time, if we see the overall and the advanced economies, we are trailing behind, so on the negative side. When the world economy collapsed in 2008, the order book for the shipping and offshore industry was at an unprecedented level. It was on the peak because everything was growing. So the vessel owners were hungry to make new vessels. And the fleet, they wanted to add as much as possible, and especially it was market driven because oil price was going up, drilling was on the upside, and the offshore supply vessel which are required was in scarcity. Even those days, if we talk about Middle East, because this is a summit whereas a focus on MENA region, so let's talk about that. We saw that in this particular area, Saudi Aramco was hiring more and more offshore supply vessel, which combines, of course, platform supply vessel or diving supply vessels or anchor handlers, tug supply vessels, and all those. Yeah. So people like big players from this particular market, from the Gulf and GCC and Middle East, they were putting as much as possible financial pressure to the banks to fund or from their own. But then, the world fearfully debates today whether there will be a double-dip recession. The energy industry and the underwriting markets are both suffering from the same problem because surplus capacity, as rates are softening, yet fresh capacity is queuing up to join in, particularly in Lloyd's, almost in defiance of logic. There's no logic there. As I was telling you, this world is most unpredictable as it used to be before. We haven't experienced in the history the catastrophe which we have seen now in Japan, or even the history, if we talk about the Gulf of Mexico oil spill with the largest in the drilling industry and in the oil gas industry, earthquakes, and simultaneously we say Haiti, Chile, New Zealand, and floods in Pakistan and Australia, natural catastrophe, plus the political disturbance in the Middle East, if we see what's happening here in Bahrain, Egypt, Iraq, Iran, Libya, Oman, Tunisia, Yemen. So overall, if you see, is not the same which used to be, and nobody can do any much prophecy on this unless the whole global village comes together to find a solution for that. Major factors which are driving energy and marine insurance industry after financial meltdown. Global energy insurance market. Let's talk about the global energy insurance market. 70% we all know, and that has been the history, that the marine energy insurance are written from the Lloyd's market, from the London's market. So 70% of our exposure was always from the marine and energy industry with Lloyd's. And then if we talk about the other markets, the largest operator extra expense loss in the upstream market history we never observed before, because the Mackendo, the losses, the BP, and even the Japan Turco, the tsunami, the quake which has hit, still we haven't gone to the bottom of the pit, that what are the losses, and that once we come to, then we will know how much was the loss. I'll talk separately about Japan, because in Japan, the trend and how the insurance industry work in Japan, which are the segments and domestic, international coverage, and then I will talk about the own Japanese nuclear pool, which they work, which is supported by government. Both upstream and downstream market remain overcapitalized. From morning, Mr. Omar has given and my other friends has given that even the local market is overcapitalized the same way. Globally also, upstream and downstream market is overcapitalized. New series of energy losses are also contributing to the brake on any market softening, at least in the short term. And in the meantime, the statistics continue to point to overall profitability in both markets. So we should not be too much happy. But as I said, I'm an optimistic man. So in the end, I will try to make your faces a smile. So wait for that. Then, major factors, if you see also in the local arena, which is the Middle East, whereas the Gulf of Aden, where the vessels pass through that, and the Somali parrot, which you all know, they come out and then they go in hideout, and the government can't do. Even the policy is that IMO does not permit or give sanction to the vessel owners to keep arms on board the vessel. And so we are suffering, and there has been a lot going on in debate and discussion to change the IMO regulations and to give some sanction, especially to those vessel owners, their vessels which are operating in that region particularly. But at the same time, if you see kidnap and ransom policy is there, which is an option and which is not mandatory, and but it's of course again an expensive affair for the vessel owners and who are operating in that region. So they get the additional cover and support provided by kidnap and ransom KNR policy. But then those who have elected to purchase such policies, as I said, is expensive. The increase in sanction against countries such as Iran has brought new challenges in 2010. Underwriters and brokers are constantly working to ensure they remain compliant within the various different sanction regime. The European Union's latest sanction directives is due to be ratified, and while its impact on insurance is not yet clear, anyone even considering ways in which sanctions could be avoided may be prosecuted under the anti-avoidance clause. As profit margins continue to be squeezed, we foresee increased divergence between those underwriters who are looking to build or expand their accounts and those who may become increasingly defensive or selective. We heard as well in earlier presentations, a few of my friends, they said that the market, here it is, the competition is cutthroat, and the reason is that it is overcapitalized. And then if you see in this particular market, there are small players. They say that they won't, it's a matter of survival for existence, and they're trying their best to offer to the client rates which are not prevailing in this market or has not been observed even for last 20-some years. Of course, I have no debate there, but I know this is, of course, we've been talking about consolidation. We are talking about mergers and acquisition in that area, and that's not the subject here. But you have a legitimate ground also to for those friends from the insurance industry as well to support them with the rates which they are offering, because they also have to survive, unless and otherwise there has to be a consolidation or merger and acquisition which takes place, and the regulatory authority comes in to support their genuine demand. This means I was talking about that we employ a sound broker that applies to the clients who understand, the broker understand the whole thing. Okay, now let's talk about 10 most expensive earthquakes in history, pre-Tokyo, Japan. If you see the figures, and if we see here, these are all losses in billion US dollar. I can see a figure of 100 million, which Japan, 1995. This was the figure which was the latest